Hello and welcome to this week's crypto update. So what's been happening in the crypto space and in course in macro? Well, this week we can see that first of all, and this came in on Wednesday, recording now on Thursday, and we have cooler headline prices. What's that mean? The July CPI, or Customer Price Index, showed headline inflation rising 2.7% year over year, below the economics prediction of 2.8%. This then has given the market what it appears to be the green light to go, okay, this is going to open up the door for the Fed to reduce interest rates in their next opportunity in September. Up to about a week ago, the odds of that happening were about 57%. We can see those odds now are climbing rapidly, particularly off the back of this news. The market reacted really positively to this. The market seemingly read the data as the final green light for the Fed easing. September rate cut odds jumped to 94.4% from 85% a day earlier, and like I said, 57% just last week. So ultimately what they're doing is they're taking these interest rate or the inflation numbers and saying, okay, because the inflation numbers are not as strong and they're pulling back, that opens up the door for the Fed to reduce interest rates in September. Why? Because if the two key elements are the inflation, if they can get inflation moving down towards their 2% target, and also the economy is looking like it's struggling, and at the moment there are signs that the jobs market is weakening in the US, then that opens up the door for reducing interest rates. The reason the Fed haven't been reducing interest rates all along, based on the existing data, is because they are fearful that the tariffs will actually increase inflation over the coming months, and they're afraid to reduce interest rates in case they exacerbate the effects of that. However, because the CPI came in lower, the markets have just read, that's it, we're going to have, almost as a certainty, we're going to have rate cuts in September. And what's the market reacted? It was enough to fuel the S&P 500 above 6,400 for the first time to fresh records high. So we've just hit all-time highs once again in the S&P. It wasn't the only place where we saw all-time highs, because Bitcoin also tops 124,000 to rewrite all-time high. So sustained upward momentum expected through year end. So Bitcoin hit a new all-time high, briefly surpassing 124,000, fueled by growing expectations of a September interest rate cut and rising institutional demand. Analysts expect its upward momentum to continue through the end of the year as ETF inflows and corporate treasury acquisitions contribute to a perfect storm. So again, the reading on the market is the inflation has come down a little bit lower than expected. It's moving towards that 2% target, and this is going to open up the door for Fed rate cuts in September. Will that happen? So then we go to the VIX. The VIX just hit its lowest level of 2025, coming in just under 15. There are a few reasons volatility has moderated, and the VIX is a measure of volatility, and the lower the number is, the bigger the expectations of steady upward growth. There's a few reasons volatility has moderated and investors' uncertainty has subsided. Why? Again, back to the July CPI effectively confirmed a September rate cut as they see it. Reciprocal tariffs are in place, clarifying the trade policy outlook. So there's a bit of certainty, or at least a lot of uncertainty, being taken out of the equation with regards to tariffs. And the more uncertainty that's taken out of the equation, the more confident investors and traders are in doubling down in their positions in the S&P, the likes of Bitcoin and so on. And the S&P 500 earnings have broadly beaten expectations. So the expectations for earnings for, a lot of the biggest companies out there, those expectations were beaten. And so again, they see, okay, another reason why they can go out and buy and bid it up even higher, because if they've got higher earnings, how they work out the perceived value of these companies is they take their earnings and multiply them by 20, 22, 23, 24, whatever the number is. And that's how they get their answer. And of course, if earnings go up and you use the same multiple, you get a higher number. So they're prepared to bid up the S&P even higher. Is this logical? So the VIX isn't an end-all indicator or crystal ball, but it does provide a useful snapshot of how investors view the current setup. And right now, despite the red flags, Wall Street seems convinced nothing can go wrong. That's always a concerning position to be in when the market in general and investors in general, both institutional and retail, all believe that everything is absolutely perfect and is going to stay perfect, ignoring all the potential red flags that are out there as to what could interrupt this. Dangerous territory. And then we have Ethereum. We saw all-time highs for S&P, all-time highs for Bitcoin, and we now have Ethereum really making a big move as well. So the spot Ethereum ETF saw another 523.9 million in daily net inflows following a 1.02 billion net inflow day. This extends the Ether Fund's positive streak to 6 consecutive days, during which they attracted 2.33 billion in net inflows. This is absolutely huge, and that's happening in the ETFs. On top of that, we have the Ethereum treasuries are going absolutely wild. The largest Ethereum treasury firm, Bitcoin, adds 317,000 Ethereum to push holdings worth nearly 4.9 billion, so just under 5 billion. The big news on that is they had none 2 months ago. This has been a huge buying spree at a very fast pace, and certainly can move towards understanding how Ethereum has moved at the pace that it has. And if you saw the video that we released just yesterday, one that we did about in middle of April, we were talking about exactly this happening, and it's played out just as we had expected. On top of that, the treasury game is going parabolic, because it's not just Bitcoin, there's also Bitcoin Immersion, already the world's biggest ETH holder, just blew past the 1 million ETH milestone. It now holds 1.15 million ETH, worth just shy of 5 billion, and that is very close to its 1% of all existing supply of Ethereum. Its goal is to own 5%. A buying binge that cements its lead and keeps it on track for a wild target of 5% of all ETH in existence, about 25 billion at today's value. So that basically means even if ETH wasn't to get any more expensive, they're planning on spending another 20 billion on buying up ETH. What buying pressure? And they're not on their own. We see SharpLink Gaming, SBET, just pulled in 400 million to boost its stash past 3 billion. That's on top of 900 million raised last week. It now holds 598 and 800 ETH, worth over 2.5 billion, is chasing its own 1% supply goal. So that's got it roughly halfway there. So they have another 2.5 billion of buying pressure come to ETH, and that's just two. Add in players like BitDigital and publicly traded ETH treasuries now control several billion dollars worth of ETH. Standard Charter says that this could hit 10% of all ETH in circulation. Now, what we have to bear in mind here is when they're buying this Ethereum, it isn't to sell it sometime later. They're looking to buy, hold, and as something we've pointed out, if and when it gets to a point that Ethereum ETFs are going to be allowed stake to build yield on top of what they're already doing, then it's highly likely they're going to not just buy this Ethereum, but hold it very much long term and generate revenue along the way. It's huge. So does this mean that we have a new alt season setup? Well, there's certainly indicators to show. Number one, Ethereum itself has just gone just shy of all-time highs. The Google search interest for altcoins is at a 5-year high, and it's not just by a small margin. Current altcoin search interest is almost twice higher than it was in the 21 frothy market top and at the 24 Trump pump time. So you can see here in the chart, where it's been in the past at these real highs, and it's way beyond that, over twice as much right now. So there's a huge amount of retail looking towards altcoins at this stage. So the other one is we're still not in all season. We've been bouncing between 40 and 60 on all season chart, as you can see below here, for the last 3 weeks. We need to hit 75 to confirm things. So you can see here, it's at the 49 marker right now, bouncing between 40 and 60. 75 would confirm all kind season, not just there yet. And we see funding rates are still low. So positive funding rates indicate the market is betting prices will go up. But when they climb above 0.005, that's when we enter overheated territory. And you can see here, we're nowhere near that point yet. So there's plenty of room to go from here. So you can see within crypto again, there's huge bullishness towards Bitcoin, but towards Ethereum. Is that building towards our altcoin season? A huge amount of factors would indicate that that is the case. And we certainly would be of that mindset too. However, if you take here from Charlie, he's put in 1. Stocks, all-time high. Home prices, all-time high. Bitcoin, all-time high. Gold, all-time high. Money supply, all-time high. National debt, all-time high. And the CPI and inflation is 4% per year since January 2020, twice the size of what the Fed target is. And while all this is going on, they're talking about reducing interest rates, which doesn't seem logical. It is now priced in by the market, and also it appears by the likes of Bitcoin, Ethereum, and risk on assets in general. But all the while, what if that doesn't happen? There is no guarantee, despite the fact that they're saying it's 95% chance of a rate cut in September. September is quite a way away as it is. Now, when I was preparing this, I was going to leave it there. Who knows what could happen in the macro environment between there now and then. It's quite a bit of distance between here to the middle of September when these rate cuts may or may not happen. What if they don't happen? Or what if something happens in between to cause doubt in that? Well, we didn't have to wait too long, because today, on Thursday, the PPI changed the picture. The PPI is the producer price inflation. And that data was released, and it was scorching hot. In other words, the PPI increased by 0.9% month on month, which was against the expectations of just 0.2%, and it increased 3.3% year on year against expectations of 2.5%. And so all of a sudden, within the space of 24 hours, what was almost guaranteed rate cuts in September, now there's much doubt on that. And again, the market has reacted to that. The market has come back, Bitcoin has come back, Ethereum has come back. And so the point I'm trying to say to you on all of this is this. No matter how certain they are about anything happening, there is nothing certain in the markets. And with so much potential volatility that can be brought to the table through this type of information, through the US economy, the jobs market, through inflation itself, whether it's PPI or CPI, etc., and of course the fear of what tariffs might bring along the way, there is absolutely no guarantees that we're going to see a reduction in interest rates in September. And there is still a long way between here and then, and who knows what volatility can come along the way. But the bottom line is, the point is this: no matter what the certainty may appear to be, things can change. And when they do, we see a significant reaction to it. And we've already seen the reaction just from this simple information from PPI. So ultimately, does it look like we're moving towards altcoin season? Absolutely it does. It's hotting up. Ethereum is certainly pointing the way. Bitcoin has had its run. I believe it's going to continue. Ethereum still needs to clear its all-time high. I think that'll happen, though. Again, we will have pullbacks along the way, as we've just seen today. But ultimately, it's pointing the way, provided we don't have any significant negative news coming out in the macro. And that's something we keep an eye on day to day, and up to date you weekly. Hopefully you found that useful. We'll talk to you all very soon.